Good afternoon, dear guests, distinguished speakers, and valued partners of the Alliance for Green Commercial Bank. I'm Carlos Serrano, Principal Operations Officer of the International Finance Corporation, the private sector arm of the World Bank Group. And I'm truly delighted of introducing myself as the recently appointed head of the Secretariat for the Alliance for Green Commercial Banks, based in Hong Kong and fully dedicated to this important initiative, which was launched in proud partnership with our anchor for Asia, the Hong Kong Monetary Authority, a central bank that leads in sustainability. It is my absolute pleasure to welcome you all to today's enlightening webinar on driving innovation in green bond market development, digital green bond issuance. Before delving into the complexities of tokenization in the green bond market, I would like to take a moment to introduce the Alliance for Green Commercial Banks. The private sector is a fundamental actor in complementing the public sector to achieve the Sustainable Development Goals and the global climate agenda. In developing markets like many in Asia, commercial banks play a crucial role as the primary channel for facilitating the allocation of the sustainable capital needed to achieve these ambitious goals. To support banks in the transformation from banking as usual towards sustainable and green banks, a multi-systemic approach is necessary. This includes providing regulations that create an enabling environment, allowing banks to access green and sustainable financing from other lenders and investors, offering specialized advisory services, and most importantly, providing access to green banking knowledge, leadership, and community building. This last aspect, focus on knowledge, leadership, and community building, is at the core of the value offering of the Alliance for Green Commercial Banks. We are a collective membership initiative, and what makes different the Alliance and unique is the integration into a larger ecosystem where it coexists with the own propositions of the International Finance Corporations, HKMA, the Cornerstone Banks, and others. The Alliance brings valuable knowledge about green banking, intellectual leadership, and community building. However, its ecosystem has the potential to further deepen and accelerate the transformation of the banking sector through direct and bilateral action between the main stakeholders of the Alliance and the member banks. In conclusion, while knowledge is the primary focus of the Alliance activities, it is important to know that its goals goes beyond education. The aim is the transformation of the banking sector. IFC and HKMA, through the Alliance, and leveraging other leading banks established in Hong Kong, are working to promote and support the accelerated transformation of the Asian commercial banking sector towards a sector that, in alignment with sustainability and the climate agenda, plays the pivotal role that is expected to drive sustainable and resilient future. Today's webinar is a testament to the power of collaboration. We are proud to host this event in partnership with our climate anchor, the Hong Kong Monetary Authority, whose leadership and commitment to green finance has been instrumental in driving the industry forward. We are also honored to have with us representatives from key banks such as HSBC and a strategic partner whose experience and global reach have been invaluable to our Alliance. Their participation today underscores the importance of shared knowledge and the collective pursuit of innovation in green finance. Additionally, we are privileged to have the expertise of Goldman Sachs, a leading global financial institution that has been at the forefront of integrating sustainability into its operations and investment strategies. His experience in the field will undoubtedly enrich our discussion and understanding of the topic at hand. So on behalf of the Alliance, we warmly welcome you to this event. With great appreciation to our strategic ally and Asia anchor for the Alliance, the Hong Kong Monetary Authority, and to all of you, I'm really pleased now to introduce Georgina Locke, HKMA Head of Market Development. Many thanks.
Ladies and gentlemen, Carlos, a good day to you all. I'm Georgina, Head of Market Development at the Hong Kong Monetary Authority. It is a great honor to be invited by the Alliance for Green Commercial Banks to join today's webinar on driving innovation in green bond market development and to share the Hong Kong MA's work in this space. As we are all aware, many economies and companies face substantial financing gaps when it comes to meeting their sustainable development needs. The green bond market holds significant potential in bridging these financing gaps and supporting the region's transition to a sustainable future. Encouragingly, the Asia bond market is rising to meet this challenge. Last year, more than 20% of the region's international bond issuances were in green and sustainable bonds, surpassing the global average of around 10%. As a leading green finance hub in the region, Hong Kong is playing a vital role in this positive transformation. In recent years, over 1/3 of Asia's green and sustainable bond issuances were arranged in Hong Kong. In 2023 alone, the volumes amounted to $30 billion, equivalent to 37% of the market, and placing Hong Kong at the top of the region's league table. Apart from serving as a key green financing hub, Hong Kong is also committed to fostering innovation in the green bond market, which is the topic of today's webinar. In particular, I'm especially grateful for the opportunity for us to share with you today the Hong Kong MA's own experience in tokenizing the Hong Kong SAR government green bond. So far, we have issued 2 tokenized government green bonds in 2023 and 2024 respectively. Through our 2 issuances, we have demonstrated the potential of distributed ledger technology in enhancing the efficiency in the bond issuance process, as well as the conducive environment of Hong Kong in supporting innovation. My colleague Oscar will provide more details in the panel discussion to follow. Joining us at this webinar today are also representatives from Goldman Sachs and HSBC, who have both played pivotal roles in our 2 issuances. I look forward to their insights and sharing on our 2 issuances, as well as on market innovation more generally during their presentations. Hong Kong remains committed to driving innovation and promoting the development of sustainable finance. We will continue to explore new possibilities and advancements to our green bond market. I hope our sharing today will provide you with an overview of the current landscape of green bond innovation and the Hong Kong MA's efforts in this domain. Thank you.
Thank you, Georgina and Carlos, for the opening remarks. Good afternoon, ladies and gentlemen. I'm Susanna Wong, Senior Manager of the Market Outreach Division at the Hong Kong Monetary Authority. I will be the moderator of today's webinar. As Georgina mentioned, green bonds have indeed emerged over the years as a powerful instrument to channel investments into environmentally friendly projects, promoting sustainability and resilience. As Asia's green finance hub, Hong Kong is consistently committed to the development of the green bond market and has taken significant steps forward in this realm over the years. Green bond tokenization was one of the pilot projects announced in the government's policy statement on development of virtual assets in Hong Kong in October 2022. Today, we're very privileged to have with us our important partners that embarked on this journey closely with us. May I invite Rosie Hampson, Executive Director, Digital Assets from Goldman Sachs, and John O'Neill, Global Head of Digital Asset Strategy of HSBC, to deep dive into each of those issuances. Let's begin with the first issuance. Over to you, Rosie.
Hi, my name is Rosie Hampson. I'm part of the GS Digital Assets team, and today I'm going to talk to you about Project Evergreen, which was Hong Kong government's inaugural tokenized green bond issuance. So what is the GS Digital Assets platform, and what was it used for as part of the Hong Kong government's inaugural issuance? So the GS Digital Assets platform is a full lifecycle tokenization platform, from everything through connecting to book building platforms, primary distribution, asset servicing, through to secondary trade settlement, and everything in between. So fundamentally what this platform provides is full capabilities, be it an issuer, investor, or other such market participants, to be able to support this full life cycle. So fundamentally, the platform is based on a private permissioned blockchain. It aims to provide capabilities for our clients in supporting operational efficiencies, in supporting asset streamlined distribution, and importantly, risk reduction components, which we'll come onto in a bit later. But fundamentally, what the platform does is really think through every stage of the life cycle, think through how blockchain can be underpinning this technology, and really leveraging blockchain to the best of its capabilities in terms of core tenets of GSDApp. So some of the projects I want to highlight and then talk through Project Evergreen 1.0 in a bit more detail is really some of the other work that we've done. So the Hong Kong government support was in February 2023, and this was a tokenized green bond issuance. We have also supported EIB, the European Investment Bank, in a digitally native issuance for their own capabilities. So fundamentally, the platform has tokenized asset capabilities and digitally native capabilities as well. And blockchain can provide multiple benefits in a true kind of efficient, streamlined risk reduction sense. So Project Evergreen 1.0, what was it? Why was it done? And what are some of the key learnings that we took away from it? So on behalf of the Hong Kong SAR government, HKMA supported the issuance of an 800 million Hong Kong dollar equivalent green bond. So this was a tokenized issuance, and it leveraged GSDApp, which, as I mentioned before, is GS's tokenization engine. And so one of the key things that was proved through the issuance of this bond was really thinking through the legal and regulatory framework in Hong Kong and whether this could be supported for blockchain usage, be it in the bond space and hopefully in due course in other asset classes as well. So the issuance was conducted in February 2023. This product has now fully redeemed and matured successfully using the platform in February 2024. As I mentioned before, this was the first government green bond tokenized globally. So fantastic to have been part of this inaugural use case. It really tested out the infrastructure, and by infrastructure I mean legal and regulatory regimes, which was a very important benefit of the first project. Importantly, we leveraged Hong Kong law to govern the issuance, again, proving out this fundamental infrastructure. Another key component of the project that I want to highlight is thinking through both the cash and the asset leg. So one of the core components that you want from a blockchain-based issuance is on-chain DVP, on-chain delivery versus payment. So can you have that atomic settlement? Can you have that true benefit by ensuring that everything is happening simultaneously? And so one of the things we proved out through this project was, yes, you can. So we had a tokenized representation of cash that was leveraged on-chain to ensure we had that cash leg component and ensure that these digital securities could be transacted against cash. The tokenized representation of cash was also used for the coupon payment and then finally the maturity redemption event. Another key thing that we highlighted as part of Evergreen 1.0 and subsequently also was used as a settlement cycle for 2.0 is really the period of time that you can reduce by using blockchain in the settlement procedure. So typically this type of transaction in a traditional world would be T+5. For Evergreen 1.0, we ensured that this was a T+1 settlement cycle. And something that we can talk through in a bit more detail, but is really that it's not the technology as a limiting factor for it to potentially be T+0. One of the core things that we wanted to prove out by using a T+1 scenario was really market awareness, market understanding, but also fundamental confidence in leveraging blockchain for these types of capabilities. And thus a T+1 cycle was determined on. Another key component is thinking about market connectivity or infrastructure connectivity. So through the use of our platform, we connected to traditional market infrastructures as well. So book building platforms such as Issuance, but also traditional payments infrastructure and communications platforms such as SWIFT. So really ensuring that there is this legacy integration and legacy connectivity is a core component of these types of projects, particularly at this point in time, where blockchain usage is not throughout the financial markets industry, and it's still subset components of the issuances that are done. The kind of key issuance details, so as I mentioned before, this issuance was conducted in Feb 2023 and fully redeemed 2024. Importantly, we had a number of other participants involved in the transaction, be them book runners, paying agents, custodians, etc. And this is very important to ensure that as an ecosystem, we are working together to bring the whole industry, hopefully, to be using blockchain if the solution presents itself and if the use case is there. So from a book runner perspective, there was Bank of China, Hong Kong, Credit Agricole, Goldman Sachs, and also HSBC. And some of these players also played other roles as part of the transaction as well. Some of these parties had access onto GSDApp platform, and others were in a more traditional sense. But fundamentally, what the platform proved out and what Evergreen 1.0 proved out is that you can have different participants operating on the same platform. You can leverage the kind of Hong Kong legal and regulatory infrastructure to do these types of issuances. And actually, from a market perspective, there was very strong rhetoric and confidence in the issuance itself. And particularly now that it's fully redeemed, we've shown a full life cycle issuance occurring. The next piece I just want to highlight is how this fits into GS's broader strategy when it thinks about digital assets. So as I mentioned, one of the core components that we think about is asset tokenization and full digital lifecycle issuances. So here we have our digital assets platform that supports our clients, particularly from a franchise perspective as well. The second part, which is really important, is thinking about once you have tokenized such asset, how can you use it? What's the utility of this asset? And so here we think a lot about collateral use cases. We work with a lot of our kind of peers as part of consortiums, as part of kind of consultation papers as well, to really think through what's the collateral utility and how can these digital securities be leveraged. Furthermore, the digital money component. So as I mentioned for Evergreen 1.0, there was a tokenized representation of cash, which was the cash leg on the platform. But what are the different digital money aspects that are out there in the market, be it CBDCs, be it stablecoins, be it tokenized deposits, or other such digital money use cases? So here we do work with a number of partners and peers to consider what are the opportunities available and what projects should we be actively participating in. As a firm, we also make strategic investments. So these are really thinking through what are the types of companies that we want to be leveraging and kind of working with. So this is another pillar of the work that the digital asset team at GS encompasses. And finally, we do have a cryptocurrency offering, albeit cash settled. So very specific per client, per jurisdiction, obviously thinking about all the regulatory considerations that we need to abide by. So with that, I'll conclude my presentation on what Evergreen 1.0 was, how it fits into GS's broader strategy, and fundamentally how it underpinned proving out the legal and regulatory framework for issuances of this type in Hong Kong.
Hi everybody, this is John O'Neill from HSBC. I'm the head of digital asset strategy here. I'm going to talk to you today about the second transaction in the Evergreen program in Hong Kong, Evergreen 2. So in the previous section, Rosie has described the features of the first transaction, Evergreen 1. And what I'll take you through is what we've done for the second transaction, Evergreen 2, which launched in February this year, February 2024, on the HSBC Orion platform. Now, before I take you through the specific features of the transaction, maybe I could just say a little bit about the underlying approach and philosophy that we used when approaching this transaction. So for us, there's always two key considerations. The first is promoting Hong Kong as a financial centre and making sure Hong Kong as a global financial centre is leading globally for digital asset products. The second, and that which is very much related to the first, and this is always our theme at HSBC, is developing liquidity in these products. We think it's very important that digital asset markets are as liquid as conventional markets. That's important for price discovery, it's important to attract more customers, and it's important to realise the benefits of digital asset markets. So when we were first planning the Evergreen 2 transaction, we'd already undertaken together as a syndicate the Evergreen 1 transaction on the Goldman Sachs platform when we were considering what we wanted to do for Evergreen 2 on the HSBC Orion platform. We wanted to be very ambitious. So the first thing that we decided we would want to do is do a digitally native transaction. So the previous transaction was a tokenized transaction. The second transaction, Evergreen 2, is digitally native on the HSBC Orion platform. We also decided with HKMA that we wanted to do a multi-currency issuance. You can see that on this slide. 4 currencies, Hong Kong dollars, CNH, US dollars, and euro. And actually, this was the world's first multi-currency digital bond issuance. But in terms of creating liquidity and creating the kind of interest in the transaction that we wanted to see, we did something else which I think is very notable about the Evergreen 2 transaction on HSBC Orion, is that we took the HSBC platform, we located it in Hong Kong. We'd already launched a transaction on HSBC Orion in Europe with the EIB. But when we came to Hong Kong, we had a deep partnership with the CMU and HKMA, and we integrated a digitally native platform, HSBC Orion, into the account structure of the CMU. And we also went further, and we had HSBC Orion operated in Hong Kong by the CMU. And the reason that was important is it allowed a whole range of access options into the digital bond. And as a result of that, we really saw unprecedented liquidity. So we can say this was the world's first multi-currency digital bond. It was the first digitally native issuance in Hong Kong. It's the first time anywhere that a digitally native bank platform has been integrated into the structure of CSD. And also we added international CSD access via Euroclear or Clearstream. So what we were left with was a very wide range of access options for the digital bond. And then that fourth bullet on there is what we saw as a result is really unprecedented demand, both in terms of the size of the issuance, but the number of investors. So the size of the issuance across all 4 bonds was 6 billion Hong Kong dollars, which is very much larger than any previous digital bond issuance globally. And we saw, as you can see there, 50 investors across the bond, which again is pretty much an order of magnitude bigger than any other digital bond globally. So very liquid and successful issuance. And as you can see towards the bottom of the slide, we've also seen post the issuance significant secondary market activity and even repo trading. And we think that last one, repo trading, is highly significant because markets, as I said, require liquidity. And we think these transactions, these 4 transactions on HSBC Orion in February this year in Hong Kong, they're really the first transactions which we can say, working with our partners and the syndicate banks in Hong Kong, we've seen equivalent liquidity in a digital bond to a conventional bond. We think that's a really exciting moment for this market globally. I'd like to say a little bit more about some of those features I've touched on already. So HSBC Orion is a natively digital platform. As I said, in Hong Kong, HSBC Orion is operated by the Central Money Markets Unit of the HKMA. And that allows those wide range of access options I've already described. But we also wanted to go even further. Having CMU account access options was a huge benefit to the bond, but we wanted also for international investors beyond Hong Kong and in other locations to have other access methods if they should wish. And so we also leveraged the existing infrastructure and linkage that the CMU has with Euroclear and Clearstream to allow account holders at Euroclear and Clearstream to access the bond. And as already mentioned, HSBC Orion has been used for an EIB issuance outside Hong Kong. Our platform, as well as Hong Kong, is located in Luxembourg. That's where we performed the EIB issuance. I won't take you through every feature on this slide. I hope everything is clear. But a natively digital transaction and a number of features which enable more rapid settlement, so T+1 settlement for this digital bond, as opposed to the T+5 settlement, which tends to be standard for conventional Hong Kong bonds. So digitally native, highly liquid, and highly accessible would be the themes for Evergreen 2. Then just to expand a little bit on those access routes and how we achieve that liquidity, because we get a lot of questions and a lot of interest in this. So I've said a number of times, this is a digitally native transaction under Hong Kong law, and also that the digital money settlement of this transaction uses tokenized commercial bank money. So that's a very safe and effective way of settling transactions on chain that are digitally native. We've got 4 access options, which you can see illustrated on here. So you can come in the primary or the secondary into your account, into the digital bond. You can access the digital bond via your account with the CMU. You can also, as I said, use an ICSD, Euroclear or Clearstream, to access the bond. You can come in via your custodian, or also you can connect directly to the HSBC Orion and come in as what we call a direct participant. And certainly it's our ambition to use this approach because it's been highly effective. We've seen the world's most liquid digital bond issuance on it for other issuances in Hong Kong. And we think as that happens, we'll see more interest and more direct participant connection, so we can have a more distributed architecture and start to realize even more the benefits of a blockchain and DLT-based approach. This next slide just expands on what I've said. You can see around the edge the 4 different access options, which I've described already. But what you can see on the architecture diagram, and I won't go into a lot of detail simply because we only have a short time for this presentation, but you can see that we've integrated the HSBC Orion natively digital platform deep within the account structure of the CMU. That allows those widespread access options, that allows liquidity. That means we have secondary trading, that means we have repo trading, and that overall means that we have really leading position for Hong Kong digital assets. Then finally, in terms of the architecture, just like to say a point about public and private networks, because there's a lot of questions in this market about whether public or private networks should be used for digital asset issuance. HSBC Orion has both a public and a private side to the network. And in our first implementation, which was for an EIB bond in Europe, in Luxembourg, as I said, we had both a private and a public side. But for that transaction, everything legally was on a private side. There was this additional public side, which you can see illustrated on this slide, which allowed users, if they wish to access or view their positions on a public network, Ethereum mainnet. When we brought the platform to Hong Kong, we're very open towards using public networks if there's benefits. But the decision that we made as a syndicate and led by the HKMA was that we wanted to concentrate in Hong Kong on a private-only implementation, which we're very happy to undertake via Orion. So you can see this left-hand side of this slide illustrates how customers access the platform via their custody, CMU, Euroclear are the routes. And within the center of the platform, the central piece of the architecture, as I've said, is a natively digital issuance, so a bond which lives on a blockchain, and investors swap tokens, bond tokens which are the bond, it's natively digital, and then settlement tokens which are tokenized commercial bank money, which allow trading the natively digital asset on the HSBC Orion blockchain, all in Hong Kong on a private, safe, secure network behind HSBC firewalls. That's the way everyone accesses this bond. And then finally, to wrap up, we just wanted to end this section with a little bit of a comparison between the Evergreen 1 transaction and the Evergreen 2 transaction. So Evergreen 1, as Rosie said earlier, was on the Goldman Sachs platform. Evergreen 2 was on the HSBC platform. But we should also mention that there was a number of other banks, not just HSBC and Goldman Sachs, who cooperated for all these transactions. And I think what that illustrates, as I said at the beginning, is the really important piece here is developing Hong Kong as a leading financial center for this activity, just developing liquidity across the piece. So we can say that we've seen significant progress already. Evergreen 1 was in February last year. Evergreen 2 was in February this year. Both use private permission DLT approaches, albeit they're different platforms. We saw the issuance size 0.8 billion Hong Kong dollars for Evergreen 1. Evergreen 2, 6 billion Hong Kong dollars. And I'll also say demand for even more. So there was real liquidity and demand there, which we think is important. And we saw more than 50 investors for the second transaction, which we think is really notable. The second transaction, the first transaction was Hong Kong dollars only. The second transaction was multi-currency, so also added CNH, US dollars and euro, a longer tenor, 2 years, and a really significant change from tokenized to natively digital securities between Evergreen 1 and Evergreen 2. Both transactions under Hong Kong law, using different platforms, as we've said, Goldman for the first one, HSBC for the second one, and both have achieved that T+1 settlement cycle, which we think is really material advantage over conventional bonds as settled in Hong Kong. So overall, I think we think a very good story in terms of market development, liquidity, promoting Hong Kong, and we certainly think this is just the start for digital assets, but also for market development in Hong Kong generally.
Thank you, Rosie and John, for your insightful sharing. And thank you all for joining the panel discussion on the topic of digital green bond issuance in Hong Kong today. In addition to Rose and John, we also have Oscar Pang from our market development team at the HKMA joining us today. Welcome, Oscar. The HKMA has recently issued digital green bonds for the second consecutive year. Let's kickstart our discussion by gaining an understanding of the motivations behind HKMA's venture into the tokenization of green bonds. Oscar, could you tell us why HKMA is venturing into tokenizing green bonds? And also, what are the achievements you have done so far for the two issuances?
Sure. Thank you, Susanna, for inviting me to this panel. And thank you, Rosie and John, for the wonderful presentations, which have actually taken us through the very eventful 2 years that we've together accomplished. To your question, Susanna, right? I think it's the immense potential of tokenization that really has motivated us to start our journey. This is particularly relevant to the bond market, actually, where the industry has long been looking for solutions to improve processes and enhance liquidity. And the potential of tokenization around like efficiency, transparency, and also facilitating investor participation are actually quite relevant to these aspects of the bond market. At the HKMA, we are very committed to promoting market development and innovation. So we have actually been assisting the Hong Kong government to issue green bonds for quite some years now, and which we think have helped deepen the local green bond market. And so we thought there is actually good synergy in trying out this new tokenized issuance format in our green bond issuance. So we actually started around 3 years ago in 2021 with a project called Project Genesis, which is a concept testing study that we've collaborated with the BIS Innovation Hub Hong Kong Center. And building on kind of the success of this concept testing exercise, we've executed 2 real money tokenized green bond issuances together with Goldman Sachs and HSBC, which are the Project Evergreen issuances that Rosie has and John have shared with us. So we think that both issuances are actually landmark issuances that have really unlocked lots of different possibilities. We did the first one on the Goldman Sachs platform last year, which is Project Evergreen 1. And in that issuance, it was actually at the very first tokenized government green bond, right? We are the first government around the world that has ever tokenized a green bond ever. And we think this is actually highly significant considering that, back in a few years ago, the tokenization was still a fairly new concept. And we think the significance of this was that, it was actually not straightforward at all to resolve all the issues throughout, right? The legal, technical, operational issues that we've gone through. And I'll let Rosie provide you with more color on these. But overall, I think this is a proof that Hong Kong can actually provide a conducive environment for tokenized form of issuances. And we do hope that the successful precedent we've established can provide good reference to the industry. And then earlier this year, we've completed a second issuance on HSBC's platform. And this time, we actually attained a much larger issuance size at around 6 billion Hong Kong dollars, or like 750 million US dollar equivalent. And we've also reached a much wider investor group. So we think the significance of this is that it really proved that we have actually taken tokenized bond beyond proof of concept and make it a more scalable product that is comparable to a conventional bond. So I think John has covered this a bit in his sharing, and I will let him explain more on like how we managed to scale up the issuance and reach a broader investor base. And just one more point, that issuance was actually issued in 4 major currencies, in Hong Kong dollar, in RMB, US dollar, and euro, which is another like significant achievement, being the very first multi-currency digital bond in the world. Yeah.
Thank you, Oscar, for the background. Now let's explore the wider implications of tokenization in the financial landscape. Rosie, Goldman has acted as the platform provider for the first issuance. Now, could you tell us the key advantages of choosing a tokenized bond over a traditional bond, please?
Sure, certainly, and kind of thanks for the opportunity to share. So I think just recapping kind of what happened in Evergreen 1 is some of the key benefits, right? So thinking about on-chain DVP, kind of proving out the settlement atomically, was a very key kind of accomplishment of what was done there. Proving out connectivity of blockchain-based systems to legacy infrastructure, again, a kind of core component and core rationale for doing this. And equally then kind of thinking through, you know, how can you have more streamlining of processes, et cetera, and operations. So I think you need to have that mindset of what were some key accomplishments, and then you can think about what's the benefit kind of vis-a-vis a traditional bond. So benefit versus traditional bonds, and we kind of both mentioned this, Evergreen 1, Evergreen 2, both T+1 settlement cycles versus Hong Kong conventional bonds of this kind would typically be T+5. So immediately you have a streamlining opportunity there. There could be certain debate on whether this is attractive, a T+1 settlement cycle. Not necessarily in all scenarios it might be, but that's a kind of a benefit for some parties. So that's one opportunity. I think the other piece is really about the smart contract automation. So fundamentally using blockchain, using smart contracts, you can ensure that you have pre-programmed conditions that once met, an action will be taken. So particularly when we think about asset servicing events, potentially in future, if you think about linked bonds and maybe any step-up events that need to happen, all of these are intrinsic to the smart contracts that have been written at the start, kind of pre-issuance, and therefore used across the life cycle of the instrument. So this is a very important difference from conventional bonds versus blockchain-based or tokenized or native bonds. Again, a benefit in terms of thinking about that automation, that streamlining, reducing the kind of manual processes, reducing the manual touch points, and therefore potential for risk or errors that might be part of that. I think the other key element, and this is just fundamental, is the single source of truth. You are all using the same ledger. You are all reading from the same book, so to speak. And so there is kind of no real discrepancy in terms of transparency of information. So this is another key benefit, and particularly this is more apparent to the market participants such as custodians, broker-dealers, potentially versus the pure investor that's coming in. So it's more at that kind of wholesale level that they see this benefit. But really thinking through traceability of decisions, auditability of information, and importantly ensuring that as a market participant, whatever role you're playing in the transaction, you are only privy to the information you should be privy to, but that you and other market participants are getting all of this information at the same time and from the same place. So there's no discrepancy from source, there's no discrepancy from information. So this is another kind of fundamental benefit of using blockchain. It's not specific necessarily to bonds. You can apply this to other asset classes as well, but I think was definitely proved out through both of the Evergreen issuances, and kind of hopefully will be a key tenet kind of moving forward.
Right. Thank you, Rosie, for your insights. Now let's turn to John. John, HSBC acted as the platform provider for the second issuance. Could you tell us the significant features of this issuance, please?
Yeah, thank you, Susanna, and thank you also for the opportunity to speak today. I think the key features of the Evergreen 2 transaction compared to conventional bonds, beg your pardon, in Hong Kong, would be all the things Rosie has already said, all of which I agree with. That those were important benefits. But then we felt collectively for Evergreen 2, we could go a little further in terms of the market outcome, but also the underlying benefits of using the technology. So I think the first key benefit for Evergreen 2, building on the success of Evergreen 1, was to make the Evergreen 2 transaction natively digital. And we think that's an important step forward for Hong Kong. And also, we think it's an important step forward globally, because for the first time, we took a natively digital transaction and we integrated it into a very wide range of access options, which in turn brought a lot of liquidity. I think the importance of natively digital is that it means that token transfer is aligned with title transfer. So one very important aspect of developing digital asset markets is people tend to focus on the technology innovation, which is of course very important, but the legal innovation to achieve high regulatory standards is also very important. And we think it's critical that when you receive a token, you actually have title transfer of the appropriate asset, which in this case, of course, is bonds. Although, as Rosie said, I fully agree, this principle can be applied to other assets as well. So a natively digital transaction where token transfer is title transfer is very important for Evergreen 2. But then the second piece is developing liquidity. And I often say, I think overall, not just in Hong Kong, but globally, there's 3 stages to this market. So the first stage is the proof of concept stage. Oscar referred to Project Genesis. That's demonstrating the value of the technology and really showing there's something really interesting here we can do across markets. I often feel that is stage 1. Stage 2 is undertaking a series of transactions, and this is true globally, not just in Hong Kong, which would be fairly small transactions compared to benchmark issuances, and would demonstrate that these proof of concepts can work in real world market situations. In short, to show that investors do really want to invest in digital bonds and digital securities. I think the third stage, and I think it's really exciting that this happened in Hong Kong, I think we can all collectively claim that the Evergreen 2 transaction was the first event where we had this third stage globally, is to achieve a transaction which is benchmark size. And Oscar already said the size, 6 billion Hong Kong dollars, 750 million US dollars equivalent. I'll also note that we saw demand for even more. So, you know, if it had been possible to issue even more, we could have, I believe, issued even more. And that's really exciting because that really is a benchmark transaction. And it shows the level of demand. We had more than 50 investors in the Evergreen 2 transaction. Again, that was completely unprecedented. And as I said earlier, we saw secondary trading, which is really important. That's a sign of liquidity. And we saw repo. And repo is really exciting to see for digital bonds because we think digital bonds, in order to be successful, they should have all the features of conventional bond markets. And that certainly means secondary trading, repo, dozens of investors in the primary, and just generally liquid activity. So Suzanne, but those are the things that I would really highlight for Evergreen 2, natively digital and a lot of liquidity by any global standards.
Right. Thank you, John, for sharing with us all the highlights. Now let's move forward to explore ways to promote wider adoption of tokenization. Oscar, after the 2 landmark issuances that HKMA has done, how can Hong Kong further unlock the potential of tokenization, you know, with us being the green fintech hub in Asia?
Sure. I think the potential is really huge. We've actually been seeing quite decent pickup in the Asia region in recent years in terms of market adoption. I have like some interesting numbers here from the International Capital Market Association. It's actually estimated that there are globally like more than 40 tech solutions to automate the debt security issuance process, and among which around 30 are actually available in Asia. And there are also like currently more than 30 outstanding bonds that actually have digital exposures, and almost half of them are from Asian issuers. So we thought like the trend is very clear, and it's definitely gaining momentum here in the Asia region. So kind of to further build on this momentum, we think it's important, of course, to further raise awareness and promote wider market adoption. I think the two issuances we've done are actually good starting points, because it actually prompted the relevant market participants, not just the issuers, but also like the banks, the tech providers, the custodians, the legal advisors, the investors, etc. Everybody in the ecosystem to start readying themselves for this technology. And also from this angle, we've actually like also published a paper last year on tokenization, kind of to share our issuance experience, and also with a view to providing a guide or kind of a blueprint to those that might be interested to conducting similar issuances in Hong Kong. And apart from that, of course, we are also exploring some additional use cases in the future that might further unlock possibilities for using this technology.
Right, thank you, Oscar. Now let's turn to John. John, Oscar mentioned the importance of use cases. From your observation, what are some emerging features so far that have shown promise? And what are some potential advancements that the market is looking forward to?
So I think sticking, Susanna, with digital bonds first of all, because that's where globally the market wants to start, although we're thinking about lots of other products as well. I think the first use cases, and these might seem like quite basic use cases to people who aren't familiar with digital asset markets, are just secondary trading. So we've seen in many of the previous issuances globally is activity in the primary, but very little in the secondary. And seeing regular secondary market activity is, a primary use case that's really important. But then also securities financing and repo trades, that's really important to build liquidity. And we're seeing examples of those use cases happen organically within the Evergreen 2 bonds, which is just a sign of their liquidity. I think beyond fixed income, which is where the market is starting globally, not just in Hong Kong, I think funds are interesting. We think there's a number of other products where digital assets, and particularly, as I said, aligning token transfer with title transfer would really unlock market efficiency. More rapid settlement is important. There's also opportunities for fractionalization. And one asset class we've brought that to bear on is tokenized gold. So we've been talking a bit already about the difference between natively digital assets and tokenized assets. We think natively digital is the full potential for certain assets, but there's certain real world physical assets like gold, where we think the optimum solution is tokenized copies of physical assets, simply because people like a link back to the physical. So we've done that already for institutional customers, starting in London last year, but we brought that product for retail customers with the blessing of the SFC and HKMA to Hong Kong recently. And we're seeing good demand for that from HSBC's retail customers in Hong Kong. So they're trading tokens which represent a holding of physical gold. So those are bonds and gold are a couple of examples. There's other use cases which are very interesting. And I think as we see more benchmark transactions like the one we've seen this year for bonds in Hong Kong, the market will be really encouraged to move to this new format for all sorts of asset classes and products, I think.
Right, thank you, John. Now let's hear from Rosie. Rosie, you mentioned the potential opportunities presented by tokenization in financial markets. Could you provide insight into how we can overcome challenges and foster wider adoption?
Sure, certainly. So I think maybe if we talk about what are some of the challenges then in terms of what we're looking at. So I think one of the key challenges, and this is not unique to Hong Kong, is thinking about cash leg solutions. And I specifically don't say digital cash there, cash-led solutions. So really thinking through what are the opportunities in terms of working with traditional infrastructure from a payments perspective, but equally what are potential digital money options out there as well. So I think in terms of challenges that moving this digital or tokenized bond market forward is really thinking through a cash component. I think there are a few time horizons at play to do with cash opportunities. And so that's why I say maybe integration with traditional payments infrastructure is the opportunity in the near term and can overcome the fact that there isn't commonality of digital money yet, or whether digital money will be the option. So I think that's one. I think the second, and we all talk about this, it's such a hot topic, interoperability. So the challenge really is thinking through how can you be interoperable? Who do you need to be interoperable with? And what does interoperability really mean? Does it mean systems need to be directly connecting to each other? Does it mean blockchain platforms need to be connecting directly to each other? Are there opportunities for bridging solutions? And there are a few kind of, not a few, quite a lot of projects at play globally thinking about bridging platforms directly, bridging networks, and messaging protocols as well to be able to provide this communication layer. So that's kind of one area. Interoperability with traditional infrastructure as well is a really big one, and making sure that digital assets infrastructure is not kind of going ahead and going alone without the traditional market participants. So I think that's another really key one. And again, we're seeing a lot of projects by traditional FMIs in terms of doing this as well, which is really promising to see. And then interoperability, of course, comes with commonality of language. So when you think about definition of digital assets, are we all speaking the same language? Do we all agree in what we're talking about as an industry? So that one obviously comes from the private sector in terms of what are we talking about, but it also comes to regulations as well. So I think a big challenge we still need to overcome is commonality in regulations. Not expecting all regulations to be the same. Kind of agree that regulations will likely be different when we think about this on a global level, but at least can we have commonality in definitions of what is a digital asset, what is a stable coin, what is a tokenized security, etc. So that then as kind of on the private side, we can really understand, okay, well, this is how we need to treat a tokenized bond from a balance sheet perspective, from an accounting perspective, because it's common across markets. Potentially how we deal with it, or licenses that we need to have in Hong Kong versus in Singapore versus in the UK are different, but at least we're talking about the same component. So I think commonality in terms of frameworks, commonality in terms of definitions is very important when we think about interoperability, but also regulation. So I think we do still have a number of challenges to overcome, but I think both Evergreen 1 kind of laid the foundation from a how do we do this from a legal and regulatory infrastructure. Evergreen 2 proved out further use cases kind of on top of that kind of foundation building. So I think we definitely, as an industry in Hong Kong, have made great progress. There is still some challenges to overcome to make this more of a common practice and not just sovereign issuances, right? Can we have corporate issuances as well and really driving the market in that direction?
Thank you, Rosie, for sharing your thoughts so that we have more to work on going forward. Now, as we approach the concluding segment of this panel discussion, I would like to invite each of you to share your view on the final question for this panel. And the question is, what would you like to see 5 years from now in the development of tokenization in the region? Now, let's start with Rosie for a change, and then followed by John and Oscar.
Oh, I mean, big question. I think from our perspective, we'd love to see more interoperability. We'd love to see more liquidity of assets. I think John kind of mentioned his view on that as well. We'd love to see more utility of assets. I think that's kind of really the direction that we're very keen to go in. And I think what we'd love to see is issuers, investors, other participants kind of free from the construct of legacy systems and kind of free from some of the limitations that those legacy platforms instill. But obviously one of the things we really want to see is a robust infrastructure, regulatory institutions, technology, and making sure that this really is kind of ecosystem play. So definitely keen to see all market participants coming on board, but importantly, blockchain being used for the right use cases. Not every single use case is going to need blockchain. And so I think as a market and as an ecosystem, we need to make a concerted effort in terms of what are we using this technology for? What are the core benefits that blockchain can allow? Because it will then be a lot more focused to garner the benefits from those opportunities.
Right, thank you. So John?
So Susanna, you asked about 5 years, but I think the following is realistic even earlier than 5 years, which is what I want to see. It's been my theme throughout this event is liquidity. I want to see liquid markets. I think all markets are networks. At HSBC, we want to be a significant node on that network, but nobody does this alone. We want to see liquidity development across digital asset markets. And then from a geographical perspective, this won't happen in any one financial center. It's going to happen globally. But we really do think Hong Kong is in a leading position as a result of the transactions this year. And we think and expect Hong Kong will be one of the leading nodes in that network globally. And we think interoperability is also key, but interoperability is a means to an end. What we need is liquid markets. And actually, we think the Evergreen 2 structure addresses one aspect of interoperability, because it always takes a syndicate, it takes a number of banks to get these transactions going. But if you have infrastructure where you're teaming CSDs, which have widespread customer access with natively digital platforms like HSBC Orion, then already you've got quite a lot of the elements of interoperability. Interoperability isn't just technology integration, it's also risk, it's also regulatory alignment, as been said, and it's also common standards. And things like the CFTC definitions on digital assets, we think those are really useful to further that purpose. So all the pieces, all the building blocks, Susanna, we think to make these markets liquid are coming together, and they're particularly coming together in Hong Kong, but we all have more work to do on that globally. And we need to make sure digital asset markets are just as normal as conventional markets. They have all the different styles of trading, they have all the liquidity that you would expect. And the ideal outcome is that often investors won't even think too much about whether these are digital asset markets. They want to access the bonds, they want to access the gold, they want to access whichever products are represented in these formats. So for me, that's the outcome we're aiming for, Susanna.
Great, thank you. On to Oscar.
Sure. Well, I fully agree with Rosie and John. I think the key is really interoperability, liquidity, and scalability, because these would essentially make tokenization an easily accessible and also commonplace option for all kinds of market participants. I think as John has mentioned, in our recent issuance, we kind of achieved something similar towards this goal. We connected the digital asset platform with the traditional financial market infrastructure. That is the Central Money Markets Unit in Hong Kong, our CSD here. Kind of this effectively helped us to reach a much wider investor base and enhance the liquidity of the transaction. But of course, in the longer term, I think interoperability would still be the key, or what the market is looking for. And Rosie has elaborated it very, very well, like what it means, what does it mean by interoperability in the context of different digital asset platforms, financial market infrastructure, or even the legacy systems of the various banks, custodians, all of the market participants in this space. So this would be something that the industry would continue to have to work on.
Wonderful. There'll be a lot of work for us to do going forward. Now, let's open the floor to Q&A. We have received some questions from the audience. I will read them out loud one by one. The first question goes to Oscar. From a regulatory standpoint, what are the key challenges to foster the growth of digital green bonds?
Sure. Well, I think that's a very relevant question. I'm not directly from the regulatory side of the HKMA, or like kind of the broader like regulation of tokenized securities is broader than the HKMA's remits, but kind of happy to share like what I've heard from the industry. I think the industry would generally welcome a flexible legal and regulatory environment that can really support innovation. Mm-hmm. But at the same time, like this framework or regime has to be robust enough that can help to manage the additional risk that might arise. So I think this is also kind of the approach in some of the supervisory guidance document that you can see from the Hong Kong regulators recently. So for example, I think recently the HKMA issued a circular around the adoption of DLT, where we are actually suggesting a risk-based and technology-neutral approach to supervision, mm-hmm. where the regulators would actually support the adoption of technology so long as the additional risk can be properly managed. So this is also the approach taken, say, in the SFC's recent circular around tokenized securities as well. So yeah, but I think inevitably, because given the nascent nature of this technology, this is going to be a kind of dynamic process where the official sector and the private sector would have to continue to calibrate this framework to make sure we strike a good balance between innovation and risk management.
Right. Thank you, Oscar. The second question is for John. Do you see potential advantages of digital bonds compared to traditional bonds in terms of liquidity and market accessibility? And what developments are needed to enhance liquidity in this space?
Yeah, I do see those advantages. And I said earlier that this is a developing story. As I said earlier, my view is we've seen, first of all, proof of concepts, then we've seen small but real-world issuances. Now we're seeing benchmark size issuances starting in Hong Kong this year. But I think, Susanna, your question, or the questioner's question, is really, how do we go beyond even that? How do we get these markets even more liquid than conventional bonds? And I think that's the right question, because in the long term, that's why we're all interested in this subject. I think there is the potential to add further liquidity beyond conventional bonds. And I think it comes back to, in particular, the point which has been made by all of us throughout this presentation, which is more rapid settlement cycles. So we've seen for both the transactions, Evergreen 1 and Evergreen 2, have gone from T+5 down to T+1. That's already, a really material benefit for market participants. But in the long term, or even the medium term, I would say, there is the real potential for, not just in bonds, but for other financial market transactions, to leverage this technology to speed our journey towards same-day settlement. I think that's completely realistic and very important. And what we would observe is that if you can settle transactions same day, rapidly, and also with precision about when you settle the transactions, both the securities leg and the cash leg, and we think settling both of those is very important. What you, of course, then have is a situation where you have more rapid trading because you're completing transactions more quickly. You're freeing up cash. That enables greater trading velocity across markets. Higher trading velocity means more liquidity, both potentially in the primary and the secondary. So in the long term, Susanna, I think that's the potential, or one of the key potentials of this technology. That's really exciting. And you were asking earlier about within 5 years. I see that as realistic in a much shorter period than 5 years, even though that final step to same day transactions isn't always easy, particularly the processing of banking and money movement is often a bit of a challenge there. But I think as an industry, we can overcome that, and that will make us more liquid than conventional transactions.
Right, wonderful. Thank you, John. The third question is for Rosie. What are the key factors that investors should consider when evaluating tokenized green bonds compared to traditional green bonds? And how do risk and return profiles differ between the two?
So I think from this perspective, fundamentally, what we are tokenizing or issuing in a digital form, it's the same asset. Right. Fundamentally, from an economic perspective, it's the same. So when reviewing it, you should review it as any other from a pure economic perspective. When you think about the risk profile, I think it's not necessarily less or more, it's different. Mm-hmm. when we think about, and kind of Oscar mentioned some of the circulars that have been released recently, it's very important to consider what's the network archetype, what's the platform that's being used, and fundamentally, does that change a risk profile? So do you need to think about different considerations on cyber or technology risk, and different, not better, not worse, but different risks that you might need to consider? Do you need to ask the issuer or custodian or broker-dealer, whomever you're dealing with, maybe for more information about what is the underlying technology, how is the information being managed, where is it being stored, how is it being transacted? So it's really thinking more about the differences in how the information might be passed, transacted, stored, compiled, etc., that you might want to consider. Again, not better, not worse than conventional, just different profile. I think as well consideration as to who are the parties involved. Are there fewer parties as part of the transaction? Maybe as a consideration that you might want to look at. And then I think, and I don't think we've quite reached it yet, but I hope we can reach it in future, is what are the other components that blockchain is providing? So what is the tokenized bond or digitally native bond providing? So in addition to purely providing the kind of similar financial return or same financial return as the conventional bond, is it providing you with investor greater data access? Particularly when we think about green bonds, and we didn't really touch on this too much, but can there be more transparency on the underlying asset, the real world asset that's been invested into, for example? So as an investor, do I get more granularity from that perspective? Or maybe I get a kind of more real time, and I'm not talking kind of by the minute, but a more real time reporting component to the assets that I've invested in, and kind of overarching look at my portfolio. So I think that's different in terms of the profile of the bond versus a conventional bond. But again, it's just about a changing profile, thinking about different types of risks that you might have, but thinking about different opportunities that technology can provide.
Right. Thank you very much. Now, with that, we've come to the end of our panel discussion. Thank you very much, all three of you, for joining us today, and thank you, the audience.
So I'm afraid that this webinar has come to an end, and I want to thank for the insightful sharing from all speakers, and thank you everyone for joining today's event. We have discussed in this interesting webinar about green bond tokenization, which refers to the process of converting green bonds into digital tokens using blockchain technology. Tokenization of green bonds through blockchain technology offers a transformative approach to the green bond market. It can enhance liquidity by allowing fractional ownership, reduce cost by streamlining processes, and accelerate settlement times. So thank you very much, everyone. And I just want to announce that there will be a feedback form from Zoom after this event. And we really, really appreciate that you let us know your thoughts and your opinions, which will be highly valuable to us to improve and to make a better webinars. I want to please ask you to stay tuned for the next webinar that is coming from the Alliance of Green Commercial Bank, and that will take place in May. And it will be focused around sustainable finance for small and mid-sized enterprises from a banking perspective, which is an area of great challenge due to economies of scale, etc. So don't miss the next webinar that the Alliance for Green Commercial Bank will be bringing to you. Thanks again, and have a very good day.